Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor. And this video is not financial advice. In this video, I actually want to break down this recent Reddit post from Region Formal and share a couple things I agree with, but mostly what I disagree with. This is not to come at Region Formal. I like when I see blue boxes in my Reddit refresh pool. Region Formal has done a lot of investigative, fundamental analysis of GameStop for several years, so I'm not trying to start a fight with you, Region. I'm not in any way trying to steal your clout, anything like that. What I'm hopeful for is to steer the conversation towards what I think is very, very clearly true, which is that PowerPacks is not being reported within GameStop's operating numbers. Their revenue and their expenses are not a subsidiary of GameStop's, but they are a joint venture. And once materiality is reached, those revenue numbers will be reported in the footnotes, not within GameStop's revenue. The reason I think this is very meaningful, this conversation is meaningful, and Region, if you watch this, I hope you can come to the dark side. Like I would love if you ended up agreeing with me. It's not that important, obviously, because we will find out eventually. Um, and if I'm right, I'm not going to be like showboating it. Like, look, I was right all along. Like I've been wrong about plenty of things. So this isn't even me trying to like flex some type of genius superpower. Region's probably multitudes higher of an IQ than I am. Okay, so not trying to stir up controversy. I would just want to move the conversation forward as it relates to GameStop's digital power packs because if I'm right, then there's meaningful upside within digital power packs. I made this video about why it's bullish, or it's a live stream. Three reasons why it's very bullish for GameStop to be hiding power packs. The main reason is that fundamentally they become evaluated separately, valued separately, and the drivers of the fundamental valuation for power packs are meaningfully different, as are the comps for digital power packs compared to GameStop, the legacy retailer. And for them to be fundamentally valued separately and then combined as a sum of the parts valuation, which is how you would value a joint venture, that implies meaningful upside for GameStop. Also, it means that PowerPacks is recognizing its revenue, right? It's just not going to be listed within GameStop's subsidiaries, not within GameStop's operating revenue, but we will see that explosive top line revenue growth once materiality is reached and GameStop has to disclose that in the footnotes. So it's bullish from a exploding revenue perspective. It's also bullish from a technical perspective because as a joint venture, that's a separate business deserving of its own separate valuation. GameStop can spin that off. They can make it its own ticker. They can IPO Digital Power Packs LLC, right? Or it's just Power Packs LLC, but they can IPO the Digital Power Packs business separately from GameStop. So if they are not receiving a fair valuation, right? If their stock is not reflecting the upside appropriately, GameStop has that many more tools in its tool belt to expand shareholder value long term, right? And anyone who owns a share of GME would then own a corresponding portion of the spinoff new ticker of PowerPack. So, anyways, this is why I'm having the conversation. Is in my opinion, if Region is right, then the bull case for GameStop is suppressed to a certain extent. Like there is, it's still meaningful, but it's just not as exciting of an upside scenario. Whereas if I am right, it's very likely that digital power packs is much more meaningful in terms of the short-term operations numbers, but particularly in the long-term shareholder value conversation. And so let's kind of break down this post piece by piece. So he starts off with this conversation about materiality, right? Which is a line in GameStop's 10Q that transactions were not material individually or in the aggregate during the fiscal year. Region then says, despite the seeming success of both grading and power packs, on first reading, the report implies financial success has been negligible. So this is one way that me and Region already disagree. Region thinks that this statement is in reference to both digital power packs and card grading services and GameStop's graded card marketplace, that all of those together are not material. I do not think GameStop is saying that. I think GameStop is saying that digital power packs are not material, but that the digital power packs are treated separately from the card grading and graded card marketplace. In other words, I believe that the graded cards and card grading are included within GameStop, right? We've talked about this before, but that line, 2 lines up in this post from Region, GameStop discloses, says, hey, we are now GameStop, the company, is an authorized PSA dealer. We provide authentication and we sell cards through GameStop. So GameStop card grading, GameStop's PSA card grading, and GameStop's PSA card sales are integrated within GameStop, the company. They are a part of GameStop's operations. The revenue from that grading is recorded within GameStop's collectible sales, and we see it, right? They announced this partnership in Q4. What has happened to collectible sales per store? Pre-partnership, they were making 50K in revenue per store, and it has only gone up every quarter to now $120,000 in revenue per store coming from collectibles. So that's meaningful. That's material, right? The card grading and the graded card are absolutely material for GameStop. Now, why? So, anyways, why would they then say that digital power packs are immaterial? And this kind of bleeds into the next point, which is what is materiality, what is not. And basically, I'm trying to explain this in the shortest way possible. You could say that. So, anyways, let's pause right there. One difference. I think this immateriality statement is in reference specifically to digital power packs, not to the card grading and graded card services. So, what is materiality? In Region's position, he says there's no precise definition. I actually had a very similar process on my live stream. Oh, thank you to those who have subscribed, by the way, and have joined as fans and friends. All the earnings of the channel go to Dearest Book Jamie Shares. I do appreciate it. My live stream of earnings. Okay, this video here, I had a very similar research process of, man, maybe 5%, right? Like, what is materiality? What's the standard? I have since shifted away from this because this question that Region's asking is from like an accounting perspective. Like, who's to say whether something's a material part of GameStop's business, right? It doesn't really matter. If you're talking about an employee stealing money, obviously it's a lower threshold. But we know that like if GameStop is talking about its own subsidiary, they don't have to say whether it's material or not. This statement that, the individually or in the aggregate, transactions with collectors were not material. GameStop, if Digital Power Packs is GameStop's operating subsidiary and reported within GameStop's income, GameStop does not have to say that. They don't have to say it's immaterial. And in fact, if you go to like literally all of GameStop's historical 10Ks and 10Qs throughout the years, like they have changed their reporting lines frequently, and it's not because they have to, right? Like they're not obligated to break out a certain number of lines within their operating segments. So they don't have to tell us anything, whether it's material or not, right? For example, 27% of GameStop's business is pre-owned. But now GameStop doesn't tell us the pre-owned, right? They reorganized it. It's not because they don't make any money on pre-owned anymore. It's not because pre-owned sales are immaterial. They just don't want to split that out anymore. So GameStop could choose not to split out digital power packs if it was an operating subsidiary without saying the sales are immaterial. But what if the sales are very low? Like, would they say that the sales are immaterial? It wouldn't be in their best interest to say that, right? There's no reason why they would want to say that. And again, if you look historically, if you look at their other products, they're like other products include PC entertainment, other software, digital products, digital currency, mobile products, tablets, refurbished phones, accessories, Game Informer magazine, Power Up rewards. Like GameStop listed every single source of revenue historically that they make, and they still do. But many of those sources of revenue were never quote unquote material. Like GameStop's mobile business that they touted all the time, that was this big growth driver, it never did more than 5% of their sales. And look, throughout the years, they continue to mention um, like that they sell strategy games. And yet, what we learned, like, look, every year, this Game Informer magazine, they're talking about Game Informer magazine all the time. They never made more than 1% of their revenue from Game Informer. Like, it was maybe less than 0.1%. Like, it was like $1 million of sales for Game Informer, which you could deduce through the years of them consolidating uh, their product lines. So what am I saying here with this materiality thing? Basically, if Digital Power Packs is an operating subsidiary of GameStop, GameStop does not have to say that the sales are immaterial, and they never have to break out the Digital Power Pack sales. They never have to do that. They don't have to tell us, and even if they don't tell us, they don't have to say they're immaterial. Now, what we see historically is that even when line items of sales are immaterial, they still never say those sales are immaterial. Like historically, GameStop has never said, hey, this revenue line that we have is immaterial, or this business that we do that we're not separating out. We're not listing Game Informer separately. We're just lumping it into other. Or these days, Power Up Rewards is just lumped in across their different lines. They're not saying revenue for that's immaterial because they don't have to. And why would they? They're just saying, here are the things we sell, here's how we make money. So the historical precedent is that even when sales are immaterial, GameStop does not say that they're material, or that GameStop does not say that they are immaterial. Now, if Digital Power Packs is not an operating subsidiary of GameStop, and it is a joint venture that is therefore, and the joint venture is again not GameStop's operating subsidiary, but accounted for separately within its own company, not disclosed, and not included in GameStop's operations, then GameStop has to say the sales are not material. Unless they're going to give a footnote where they break down PowerPacks revenue, PowerPacks expenses, and PowerPacks balance sheet, PowerPacks inventory. If they're not going to provide us the snapshot financials of digital PowerPacks, then they have to tell us that digital PowerPacks is not material, right? Is this getting too hard to follow already? Stick with me because it's going to get clearer. Okay. But off the jump, this is talking about digital power packs, in my opinion. It's not including um, the PSA grading and uh, graded card sales. The historical precedent is that this materiality statement is not talking about an operating subsidiary, but is talking about a joint venture that is not included within GameStop's operating numbers. So, what are the implications? Okay. This materiality standard, if we're just talking about an operating subsidiary, then yes, there's no rule for materiality as it relates to, well, when would GameStop have to tell us? Again, GameStop never has to tell us. They never have to tell us if PowerPacks is an operating subsidiary of GameStop, right? So I break down margins, right, within different categories. GameStop never has to tell us, by the way, we made 135 million in accessories. They never have to say it. It doesn't matter that that's a meaningful portion of their gross profit for the quarter. They never have to, you know. So that statement means less if you think Digital Power Packs is a operating subsidiary. If you think Digital Power Packs is not an operating subsidiary, then there actually is a precise definition, and it's called the equity method, the equity accounting method. Okay, joint ventures most frequently, most often, are not consolidated subsidiaries. Most often, joint ventures are not included in the parent company's operating numbers, revenue, expenses, inventory. Rather, joint ventures usually use the equity method, and the equity accounting method does have many rules for how the accounting is considered. That's the whole point of this video is me teaching you about the equity accounting method, exactly where DME is reporting power packs. So, again, I disagree with Region here and would encourage anyone to look into the joint venture accounting method. If the joint venture is 20 to 50% owned by GameStop, then it would be not reported within GameStop's numbers. If the joint venture was fully owned by GameStop, right, majority owned by GameStop, perhaps then they would consolidate it. But again, if they consolidate it, they would not have to say that the digital power packs were immaterial. Just like they hadn't said in previous 10 Qs that the graded cards were immaterial. It's another reason why I think this statement is not related to graded cards, is because they've had three reporting statements since they started card grading, and they never had that line in any of their prior reporting statements. That line just came up in this most recent 10Q, the first reporting statement since they launched digital power packs. So the materiality standard is 10%. Anyways, you could watch this video. You could watch this video if you want to learn about the equity accounting method. But it's not our materiality is not arbitrary for joint ventures, and it is not a 5%. So then Region goes on some extrapolations using that 5% number. And again, he said even 40 million in net sales through power packs would not have crossed the material threshold for separate reporting. Again, I just disagree. Like, I feel like Region is uh maybe misunderstanding. Like, GameStop never has to report separately. They don't have to report their used business. They don't have to report accessories separately. They don't have to report their graded cards separately that they sell online, right? They don't have to ever. They don't have to. If Digital Power Packs is a joint venture that's not represented in these numbers, then after the 10% threshold, right, after materiality is reached, they do have to put a footnote disclosure in their financials. Like they have to then tell us what PowerPacks revenue and expenses are really doing. Then this is where things get kind of off the rails. I mean, I really like the investigative research, and I'm not trying to dissuade Region from continuing because we all learn. This is how we learn, right? If you don't want to learn, like don't don't try, right? Like if you don't want an edge, then don't learn, and if you don't want to learn, then don't fail, don't try. Like this, it's just part of it. Anyways, Region references GameStop's past 10K, where they talk about revenue recognition. Now, at the beginning, this unhighlighted part, they say we recognize revenue when performance obligations are satisfied by transferring goods or services to customers in an amount in exchange for those goods or services. The significant majority of our revenue is recognized at a point in time, generally when a customer purchases and takes possession of merchandise through our stores, or when merchandise is purchased through our e-commerce platforms and delivered to a customer. Okay, that's when GameStop sells stuff, that's where they recognize revenue. They then talk about their GameStop Pro stuff. And then at the bottom, they talk about gift cards and then digital products. They say we also sell a variety of digital products which generally allow customers to download software or play games on the internet. The significant majority of the digital products we sell are unbundled and do not require us to purchase inventory or take possession of or take title to inventory. For these products, we earn a commission based on a percentage of the retail sale as negotiated with the digital product publisher. We recognize the sale of these digital products on a net basis, whereby the commissions earned are recorded as revenue. So Region is saying that this statement applies to GameStop's graded cards, their card grading, and digital power packs, and I just wholeheartedly, emphatically disagree. GameStop, like, I, how do, how do I start? First of all, digital products was literally a separate line for many years of GameStop's reporting. Like they have a line titled digital, and it is within the software business, and they provided margins separately for that portion as well, right? And those margins grew from 58% in 2012 all the way to 88% in 2018. Does GameStop make 88% when you buy a game digitally from their store? No. But this is what GameStop is saying is, hey, we're just going to record our net, basically. Like, we're not going to record every dollar from the revenue that we make from digital video games. We're going to record the net so that basically our gross margins aren't screwed up, right? We want to show people that our margins are improving and we don't want a ton of revenue on super low margin digital video games. Right? And they make it very clear. Digital products, they are games, it's software. There's no inventory. We don't have to purchase the inventory. We don't have to deliver the inventory. The customer does not take physical possession of it. Right? For those sales, we earn a commission as negotiated with the digital product publisher. So this is not talking about graded cards. Okay. It's talking about their digital products, right? Online sales are not digital products. Graded cards are inventory. They require physical possession, either for the customer's end or GameStop's end. Region argues that, well, what if GameStop doesn't own the cards and that actually they are all PSA's cards that GameStop is just selling on behalf of PSA? Um, that again, like that would solve a piece of Region's puzzle, but still, it doesn't make sense to call it a digital product because there are still, it's still physical inventory that the customer would take possession of. And fundamentally, those cards are not digital products. They are physical cards. And fundamentally, they are graded cards do not have a digital product publisher. Right? Graded cards are physically produced by physical card manufacturers and then physically graded by PSA, right? And again, right above that, you see GameStop say the vast majority of our sales are merchandise purchased through e-commerce and in store. So e-commerce is not digital. So this is just like a hard stop, full disagree. Which someone asked in the comments like, "Hey, I don't think PowerPacks is digital assets." You know, and Region references the FAQ from GameStop says, "Where can I buy graded cards? At this time, you can only buy graded cards online at GameStop." Again, what does that sound like? Buy graded cards online. That sounds like e-commerce of a physical product, you know? And this person asks, then why are there so anyways, but Region then explains like, well, what if GameStop doesn't have economic control? Again, it's just a far reach because GameStop is like they allow trade-ins, right? GameStop, anyways. GameStop buys graded cards from people. So they definitely have economic control. Like when a customer goes and trades in the card for store credit. And as a counter question, one guy asked, then why are there other physical online only items? Right? And then he references this one. It's a physical item, it can only be bought online. And there's plenty more examples. Online sales are not digital sales. Okay. We're all on the same page, except maybe not Region. But I'm hoping to sway you, Region. I'm hoping to get you to the dark side, like I said. This is my favorite slide. This is my favorite slide from Region's post. He says, we know that GameStop and collectors are set up as a joint venture, PowerPacks LLC, to run this. It's a joint venture. The vast majority of joint ventures are accounted for not within the parent company's operations, right? Not included here, but according to the equity accounting method, which would mean that we have not seen a single dime of PowerPacks revenue. We haven't seen it yet. And it would mean that only once materiality is reached, according to the equity method materiality standards, which I talk about in this video, only once that reached will we see a footnote that says what the revenue is, which basically overnight will show explosive growth. It'll be super exciting for the stock, all of that. So we know it's a joint venture. The only question is it a joint venture that GameStop considers its own operating subsidiary? If so, then you could argue that it's still reported within GameStop's numbers. But check it out. Region says, note the address of the venture and who is stated as its manager. The address is in California, and Collectors Universe is the manager, is the principal of the joint venture. So this to me is like the nail in the coffin for the argument that Digital PowerPacks is a joint venture operating subsidiary of GameStop. It's like, well, why would it be GameStop's operating subsidiary if PSA is the one that's the principal and the manager of its entity and it's addressed to PSA's address? To me, it's very clear that this is not GameStop's operating subsidiary. And this is all separate from the card grading. The card grading and the graded card sales on GameStop's website are a part of GameStop's operations. They are included in this number, no doubt. So then Region ends up going down this train of thought, which is actually like how I originally imagined the PSA deal. Like back in this video, sorry, I'm kind of blocking it, but like my live stream modeling collectible sales, I imagined that PSA was the primary owner of PowerPacks, that GameStop just received a small commission, and that overall PowerPacks might do about 3 million in collectible sales, which would basically all be pure profit and fall to the bottom line, which is ultimately what Region ends up modeling in this post. So I used to think this too. I'm not trying to be like a punk, but let me dive into it. So Region's saying, again, PowerPack sales would not have been required to be quote material. Again, Region, if I'm saying this too many times, but I just don't want this to be debated. I want everyone to agree with me. I think the implications are very important. Of course, it's okay if you disagree. It's not a big deal. But if you think PowerPacks is GameStop's operating subsidiary, there is never any requirement that quote unquote require like there's no required materiality standard in terms of like GameStop's never required to illustrate PowerPack specific numbers if PowerPacks is GameStop's subsidiary. He says instead, only the commission revenue can be recognized by GameStop. Again, I just disagree. I don't think digital PowerPacks is included in this revenue, which, if you look up the equity method of accounting, is like law. GameStop cannot include it joint venture equity consolidated, like the joint venture revenue consolidated within its own revenue under the equity method of accounting. It will never, even when it's $1 billion in revenue, it'll never be included within GameStop's operating revenue. $17.5 million investment. So how much money have they made? While we can't definitively know what other income includes, let us hypothetically say it's used as a proxy for PowerPacks. So I feel like Region, you're almost there at the dark side. But if you think that the other income is which under the equity accounting method, GameStop's portion of PowerPack's net income attributable to GameStop would go in the other income category. So I agree with you there, but you disagree with you here because other income is like by definition not a part of operating income, right? If you look at those lines, it's like net sales, here's the cost, here's the gross profit, here's operating income. So anything that's a part of sales is within operating income. So um, Region saying that, hey, maybe GameStop's only recognizing their commission revenue within their revenue. Like that is not, if GameStop's recognizing PowerPacks here in their sales, then PowerPacks is also being recognized here within their operating income. The other income is strictly for non-operating income, which would be where it would go if Digital PowerPacks was a joint venture rather than an operating subsidiary. But that also would mean that PowerPacks revenue would not be a part of GameStop's reported operating revenue. So all these implications are based on the $3 million of income as a proxy for PowerPacks, which again is like a logical inconsistency with that part of this presentation. So working backwards, PowerPacks would have been 39 million. So it's very possible that that revenue number is actually pretty accurate because again, coincidentally, what I had modeled in my original uh, Q3 projection is that maybe around 30 million plus or minus 10 million is what PowerPacks did in Q3. So that is like that is very plausible. I agree with that. But again, region's kind of attached to that 5% of net sales, so not requiring any other kind of disclosure. Again, region, I just disagree. Like, if there's no disclosure required for, like, for example, like, let's do one more example. Their used business. Is their used business larger than 5% of their sales? It's like, well, actually, I wonder. In Q1, is this Q1? 70 million plus 40 million, 110 million of used for 700. Yeah, so the used business, by conservative estimates, 15% of their sales. It does not require disclosure. It doesn't require added, like they don't have to tell us. Okay. I'm sorry I keep saying that. But he's saying, hey, they're only recognizing the net, right? He's thinking of it like I thought of it. GameStop's just getting the net. And he's saying that's great news because that means they're getting high profit, right? Every revenue dollar that they're recording within their collectibles business is basically pure profit because all the costs are assumed on PSA's end. That's what Region is saying. And hey, they're trying to increase profit. So that's cool. The evidence does not suggest that that is the case. Just from a profitability perspective, like GameStop's collectibles as a percentage of sales is all the way up to 31%. And their hardware is actually lower than it was in Q1, right? Hardware is down to 44%, collectibles 31% compared to 47 and 29. If all this extra collectibles revenue that's being recognized by GameStop is just the net, right? They're just receiving commissions, selling all of PSA's stuff. The grading that GameStop does through GameStop stores is PSA's revenue. The graded cards that they sell are PSA's cards. The store credit that GameStop gives, PSA is the one actually paying for that, right? Everything's PSA's, and GameStop's just receiving a commission for all the PSA related revenue. Again, this is how I kind of used to think about it. If that's the case, then to the extent that collectible sales have increased per store, or even on a dollar perspective, then those dollars would be very, very high margin, right? Like we saw the digital margins were 89%. Well, if collectibles is doing tens of millions of 80% revenue and growing as a percentage of the pie, then you would see gross margins increasing substantially, right? Region is saying that his presentation applies not just to digital power packs, but also to the graded card business. I'm saying if that's true, then GameStop's gross margins would be meaningfully increasing, right? Like dramatically from a math perspective. Like if these digital power pack sales, like you can solve for this, right? We have historical precedent for hardware margins and software margins, which leaves us with some type of margin to solve for their graded card business. And if you assume historical numbers are still ballpark accurate, even if all those increase, like all these numbers that I list for hardware and software, assume GameStop has improved in their margins compared to when they used to report these separately, including collectibles. But if you think that the PSA is high margin, like they're only getting commission type margin, well, all of a sudden, your gross margins in Q1, for example, would have been 37%, 38% almost. Your gross profit would have gone from 252 to 276. Like, unless you think that the PSA grading is a tiny, tiny portion of the business, right? Maybe they only did like 10 million in PSA graded cards. Then again, that could give you some type of consistency as it relates to the margin story. But when you think about the growth from there, right? Another 16 million in collectibles in Q2, another 30 million in collectibles in Q3. Like the revenue that, according to region, that the PSA graded market is doing is just so minimal that it's hard to say that that is plausible based on just even tracking GameStop's graded card inventory sales, or that it's very bullish for GameStop, right? If GameStop's taking all of grading, all of graded card sales, all of digital power packs, and just receiving a small commission for all of it, um, hypothetically, is that possible? Honestly, I don't even think it's possible. I don't even think it's possible because again, what makes a lot more sense is what I've been communicating, which is right here. In my opinion, I don't see any logical inconsistencies with what I've communicated. I don't see any conflicts. Like, to me, what I've communicated aligns with GameStop's best interest from a near term showing revenue growth perspective. And look, even like Q3, again, it's just crazy. So in Q1, you'd have to say that there's only 10 million-ish in graded card sales for that to make sense in net commission, right? If you go to Q3, like what do you have to say there? Because there's 273. If this is around a 90% margin, I mean, it's just amazing. You'd basically have to say like it's only 13 million in Q3. 5% of collectible sales in Q3 related to, if it's like a high margin only commission related to all things PSA. And again, that's still assuming that they've improved on all of their margins compared to historical numbers. But if they're just getting commission type revenue, you'd have to say it's 5% of their business in Q3 compared to 5% in Q1. Like basically you're saying that the graded card business has no meaningful upside compared to GameStop's legacy collectibles business. Like the commissions that they're receiving are just like very incremental improvement. And I don't think GameStop's communications indicate that, or what we can track. I don't think what we can track communicates that. I wonder what it looks like in Q2. Again, if this is 90%, then where does this have to be? Somewhere around 11 million. The other interesting piece is like GameStop Pro Rewards. counting as like counting towards their graded cards and card grading business, but not counting, not applying to digital power packs. Like it seems very clear to me this business is a part of GameStop. It's a GameStop operational subsidiary. Power packs is a joint venture that's owned probably 50-50, maybe even owned majority by PSA, but is certainly not owned majority by GameStop. I'll just leave it. The materiality immateriality standard, again, if there's an equity method, which there is for joint ventures, if it's not GameStop's operating subsidiary, then there is a method for that. Thinking about graded cards as a digital product rather than an online purchase, I think doesn't make sense. Even within Power Packs, they list each card sale, like they list your cost attached to. Oh, I've already sold all of my Power Packs ones, but like GameStop accounts for this as if you purchased the card and then you paid whatever your look like my cost for this card was $25. So on the accounting perspective, it's like here's what you paid and here's what you sold it for. Like here's what you paid, here's the card that you got. You're paying $25 for this card, which is a physical product that requires inventory. So anyways, I like all the thoughts. I think it's great. I think we make each other better, but I think there's really no historical precedent for GameStop using the immaterial word for its own subsidiaries. I think there's no reason to think fundamentally that GameStop would treat graded cards as a digital product. And based on the way they describe their revenue recognition for digital products versus e-commerce, I would consider it fraud if they were calling graded cards or digital power packs digital products. Um, so I don't think this has weight. And simultaneously, the most important slide, we know it is um, a joint venture. And we know that PSA has a meaningful portion of the pie. And if these two things are true, then it is almost like a shoe-in, no doubt, almost like legal necessity that GameStop does not include the joint venture revenues within its own revenues. Why does this all matter? Again, it just means that there's bullish upside for GameStop far beyond what the implications would be if Region's accurate. All that to say, Region, sleep on it, keep chewing numbers. Feel free to watch my video if you want to do your own research. And again, it's okay if we don't agree, because we'll find out in a few quarters whenever materiality is reached, which I would say again is not 5%, but is 10% of either revenue, assets, equity, or net income, and then boom, right? Anyways, if you learn anything in this video, let me know in the comments. If you agree, disagree, let me know in the comments. I don't really want to argue this or talk about this forever because ultimately it's going to happen. Like we'll see one way sooner or later, but I would rather, Reach and you come to the dark side. Like I would rather people agree right now that this is very clearly 99% chance, like very, all like there's no logical inconsistencies. There's no reason why this wouldn't be the way that GameStop is treating digital power packs. And if they are treating it this way, then that has meaningful upside, meaningful reasons for excitement, meaningful bullishness fundamentally for the future and the present of GameStop as far as fair value is concerned and as far as what we can expect in the coming quarters and years. So let me know in the comments. And yeah, that's all I got for y'all today. I will see you in the next one.